How you doing, Matt?
I'm doing well. How are you?
Good.
Will, nice to see you.
Hi there.
All right, we're recording.
All right. Great to be here. Thanks to everyone who's joined. I think these events, now that we have people that are actually licensed in the cannabis industry, we've been noticing just a few issues that we get questions about very frequently. And one of them is tax compliance. So we're hosting this event tonight in order to hopefully get some questions answered and just walk through how do you stay compliant with taxes. And I've got two guests tonight. Will Baker is the general counsel for the Department of Taxes. I think you must have drawn the short straw at tax because the intersection between tax policy and cannabis is incredibly complicated. But you wrote what I consider to be one of the best guidance documents in the state around how to navigate this world of taxes and specifically to Vermont. I also have Matt Schrag. Matt, you're the longtime COO of the Patients Alliance.
I've kind of done everything. The
Yeah.
finance guy at the moment, operations, all things, all time.
So I thought, it'd be great to have you on board just to talk about the practical experience of trying to stay compliant and staying in front of taxes and all the fun record keeping that you have to do, and just any advice that you might have for folks that are, kind of now entering this adult use market. But I've got a bunch of questions for you. I think, if you don't mind, I'll start with you, Will. And then I'll turn to you, Matt, after that. And of course, the chat is open. We can stop for questions as people if we want, whatever you're comfortable with. But I know that time is tight, so I should probably just jump right into it. So Will, I'm just pretend I'm about to start a cannabis business. What is the process that I should be thinking about for engaging with the State Department of Taxes if I'm just starting to think about starting a business?
Yeah, thanks, James. Good question. And it's great to be here. The first thing that you should do, I would say, if you're thinking about starting a cannabis business or any business in Vermont, is to check out our website. If you just Google Vermont cannabis tax, I think the first hit is our cannabis tax guide on our website, and it goes through all kinds of information that you would need to know, and it guides you to just our general information about starting a business, any kind of business. And you register with the tax department and with the Vermont Secretary of State, and you could do that at one location on the Secretary of State's portal and register for your tax accounts too. But I would also say that we welcome any questions anyone has anytime, and all our contact information is in the guide. And we are happy to answer any questions. We're a small enough state so that if you call us, you do get a real person, not just a recording or asking to leave a message and we'll get back to you. You can email us as well. And there's a very simple business application that you fill out where you identify what kind of business you are, the principles of the business, and what kinds of tax accounts you might need, whether it's sales tax, income withholding, cannabis tax, etc. And if you don't know, we can also help with questions relating to each one of our tax types. And give us a call. We can discuss it. We'll go from there.
That's great. So if I, for instance, was not in good standing with the tax department currently, would that preclude me from starting a cannabis business?
it would if you remain not in good standing, but there are many easy ways to get in good standing, and we will look at your cannabis business generally. In other words, the business entity that is formed for the purposes of your cannabis business, as far as the good standing determination. And all good standing does not mean that you owe the tax department nothing at all. You can have a bill with the tax department. You just have to be in a payment plan to be taking have a plan in place to take care of that bill. So it's doable. We have all kinds of different payment plans available. If you're missing returns, we can help you get old returns filed and get you into compliance.
That's great. So one question we get quite a bit is, can I pay my taxes that I owe in cash? I mean, this is largely a cash industry. Would you accept cash if I brought it to the Department of Taxes, for instance?
The tax commissioner has decided not to accept cash for any kind of. Am I still here?
All right. Yeah, sorry. Either I paused or you paused. I'm not sure. Let me try switching my network for a second.
I heard him the whole time.
Yeah, everything seems fine on my end.
Okay.
Okay.
Sorry about that.
Can you hear me?
Yeah, I can hear you now. Sorry,
Okay.
I think I froze on my end. The
Yep.
question we get a lot is, can I pay my taxes in cash? So
Yeah. So we do not have that option. The tax commissioner has decided not to accept any payments of any kind of tax type in cash. But you can pay online, in person, with a credit card, ACH transfer, a check, or we also accept any kind of money order. So we do have options to 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 pay, several options, but we don't accept cash.
yep. So can I just ask just about certain specific taxes for cannabis, how they're calculated? I mean, the basics that we know of are the excise tax, the sales tax, and then the local option tax, if that applies. Can you just talk about how those, like if I was doing $100 transaction, what those might look like?
Sure. So the new tax that we've all been talking about is this new cannabis excise tax, and that's a 14% sales tax on cannabis and cannabis products. So it's 14% on the total bill, the total sales of cannabis and cannabis products. It should be separately itemized on the receipt, so that you have the total purchases, and then the 14% applied for cannabis tax. And then also the Vermont sales tax applies to cannabis, just as it does to most tangible property. So in addition, similarly, we would want to see an itemized 6% Vermont sales tax on the receipt. So 14 plus 6, that's 20% total, but they should ideally be separately stated. And then Vermont does have a local option tax, which is a little piggyback, like a piggybacked tax on the general sales tax that is only applies in certain municipalities. And it's a geographical designation, so any sales that take place within a municipality that has local option tax needs an additional 1% sales tax applied. So it's the 6% sales tax plus the 1% local option tax. And there are different municipalities around the state that have a local option tax. The trend these days is that is increasing, with more and more municipalities getting on board. So wherever you do business, you should check to see if there's a local option tax, and then keep your kind of ear to the ground as far as any votes in that community to impose a local option tax. They give you plenty of lead time when they're doing that. So it's usually like months away that they're talking about the imposition of the tax if they're thinking about doing it at all.
And so can I just dig in a little bit? Because I think I understand it, and I just want to make sure I do, or everyone does, is that so this applies at the retail level. So not those taxes don't get charged when for instance, a cultivator sells to a wholesaler. It's when a retailer is selling product to the general public.
That's right. The sales tax in Vermont is only to that end customer.
Yep.
So if you're a manufacturer and you sell it to a wholesaler, or if you're a wholesaler and you sell it to a retailer, none of those are retail sales under the law, and so no sales tax applies to that. It's just to that final customer.
And so given this kind of just hypothetical $100 transaction for cannabis, that would be a $14 excise tax, a $6 sales tax, and then if there is a local option tax, a $1 local option.
That's right.
Okay. That's great. So can you talk a little bit about bundled products and the kind of, I guess, the state of the law on bundled products in Vermont when it
Sure.
comes to applying taxes?
Yeah, so a cannabis retailer, just like any other retailer, should be mindful of what new products they get in and what the sales tax treatment should be for that. If you sell other things than cannabis, like hats or T-shirts or stickers or other sort of merchandise that accompanies your main products, then you should understand the sales tax treatment of all those products as well. Sometimes products are sold together as one item, even though they theoretically could be two items. Some examples we usually give are a mug as well as some hot cocoa mix or something like that. Often those are sold kind of as one product, like in one packaging. And hot chocolate is a food item, and grocery food is not subject to sales tax, but a coffee mug is subject to sales tax. So if you sell a coffee mug, that's subject to sales tax. If you sell the food, that's not. But when they're together, if you're gonna combine it and sell it for one non-itemized price, and there's something in there that's subject to sales tax, then the whole thing would be subject to sales tax, unless you want to separately itemize in your books and records that portion which is the coffee mug and that portion which is the hot chocolate. You can do that if you'd like, as long as it's reasonable and consistent on the business's books and records, how they're doing that accounting. But if you want to separate those out, you can. And the same rules apply to cannabis sales. So I am just speaking from a tax point of view. I don't know if these types of activities are allowed under the rules by the Cannabis Control Board. So if I say something that is not even allowed in Vermont, then disregard it. But if you bundle cannabis and something else and you sell it from one non-itemized price, the whole thing will be subject to cannabis excise tax and sales tax.
That's great. So, I think, you mentioned something about food, and I know that we have a meals and rooms tax in Vermont. Are edibles subject to an additional, what is it, 9% maybe, meals and use tax?
No. One little quirk of the recent cannabis law in Vermont is notwithstanding the usual treatment for a restaurant or any establishment that sells meals or food for immediate consumption, that does not apply to cannabis. So typically if you eat at a restaurant, the meal will be subject to a 9% meals tax. If you buy a hot cup of coffee, that's for immediate consumption, that's subject to a 9% meals tax. However, the law says that if there is cannabis or cannabis products in a food item, we forget about the meals tax altogether. There's no 9% meals tax on cannabis items, even if it's in a piece of food or candy or milkshake or coffee, something that would normally be subject to a meals tax. It is not subject to meals tax in Vermont. It's subject to that same treatment that we just went over, the 14% cannabis tax and the 6% sales tax.
Yeah, that's great. Thank you. I got kind of a fastball for you here. I know that there's a lot of debate in this country about what's hemp versus what's categorized federally as marijuana or cannabis. But what is there a difference in the tax rate between kind of CBD products versus cannabis products?
Um, so our cannabis tax and the sales tax treatment just follow the definitions that you all follow for cannabis in Title 7, I believe. It just references it directly. So if it's cannabis that's regulated by the um, defined as cannabis or cannabis products regulated by the CCB, then it's going to get the cannabis treatment. But something like CBD oil, and I am not an expert, but if the CBD oil is not considered cannabis as defined, then it would not be subject to the cannabis excise tax. It would be subject to sales tax because most things in Vermont are subject to sales tax. So it's tangible property sold at retail, and so it would be subject to sales tax, like any other item you might buy.
I
Yeah,
can jump in here and add a little piece of that.
sure,
We've
Matt,
always
please do.
made the distinction about whether it's hemp-derived CBD or cannabis-derived CBD. So if it's hemp-derived CBD, we're paying sales tax on it. That's 6% tax. And the medical program, so we're paying sales tax on any cannabis. In adult use, if it's hemp-derived, we're not paying the excise tax because it's that. So it's until state law or federal law changes, that's the way we've always approached it. And so make sure that people identify whether it's if there's THC or cannabis-derived CBD, then it's treated differently than if it's hemp-derived CBD.
Great. Yeah, that's a helpful clarification. And then from what I'm hearing, Will, from what you said, I know a number of our retailers sell seedlings, immature cannabis plants, which may or arguably may or may not meet the definition of hemp federally, but because of our state statutes, those are subject to the cannabis excise tax
That's right. If
as
it's
well as the sales
cannabis,
tax.
if it's cannabis or cannabis products under those definitions in Title 7, then it would be subject to the cannabis excise tax.
Okay, great. And I know that this question maybe could be for the both of you, but I'll start with Will. So what I just heard from Matt was that medical patients, when they're at a medical dispensary, do not have to pay this excise tax or the sales tax, I believe. If I have a valid medical card and I go into a non-dispensary, and I present my medical card, my valid medical card, and purchase, $100, do I pay the excise tax and the sales tax?
If you're at a cannabis retailer, you pay the cannabis excise tax as well as the sales tax. The exemption in the tax law is only for those registered dispensaries when they're selling to the authorized patients.
All right. Okay. Moving on then, and unless there's any questions from the audience, I would say this is a tough one for you. So last year there was a bill, S-188. I think it became Act 158, maybe. That's a shot in the dark. And it was about kind of regulating certain aspects, certain types of cannabis, outdoor cannabis cultivators as agriculture. And it didn't go the kind of full designation of outdoor grown cannabis as agriculture, but it carved out certain areas, certain exemptions that farmers are entitled to, and applied those under certain circumstances to small outdoor cultivators. Are you able and willing to walk through some of those, so that we can make sure people are, paying their taxes properly or taxes are being applied properly?
Yeah, and so my understanding is it hits in a couple different ways. That law from last year did contemplate these small cultivators, which is a defined group. And there are two ways that their tax treatment might be different. First is their and now we're moving to property tax issues here. Generally, farmers in the state can enroll in the current use agricultural program, which taxes their land in active agricultural use in a more favorable fashion for them. There's lower property taxes on farmland generally. And so this group of defined small cultivators, there are more ways that they can qualify to keep that land in the current use program than your non-small cultivators. And there are various parameters, like they have to be previously enrolled um, in the current use program. And if you have questions about that, we have a whole current use team that can, answer questions about whether you think your operation where you grow might be benefit from the current use program or be enrolled in the current use program. And then there are also sales tax issues with the small cultivators and more favorable sales tax treatment. In Vermont, farmers enjoy some benefits under the sales tax law. They don't have to pay sales tax on various business inputs when other business owners do. And those sales tax breaks are on supplies and machinery and equipment that is used in agriculture. Uh, my understanding is that the general cannabis law determined that growers were not, um, that was not an agricultural use under the sales tax law. However, these defined group of small cultivators could enjoy some of those sales tax breaks that non-small cultivators couldn't. And those are when they purchase farm supplies, farm machinery, farm equipment, the growers can purchase those free from sales tax when they're using those products in their growing operations, just like a farmer is purchases items free for sales tax when they're growing other agricultural products for sale.
That's great. I know it's an incredibly complicated area of the law, especially the, intersection with current use. So I would encourage, there is, as you mentioned, there's a current use team at the tax department that can help provide guidance on that as well. We did get a question from the audience, and I actually was gonna have Matt talk about it because he might get into the realm of kind of offering legal advice, and I don't want to put you in that position as opposed to just general information. But maybe I'll read it, and Will, if you want to defer to Matt, I think that's okay. So the question is, curious about 280E from a cultivator and manufacturer point of view as far as cost of goods sold exemptions. Any guidance?
Is 280E the federal
Yeah,
prohibition on income tax rules and those sorts of things? Is
that's
that
right.
what? Yeah.
Yeah.
Yeah, so in addition to the various other tax treatments that went in a few years ago for cannabis, is an allowance for Vermont income tax for those deductions and exemptions. So if you're in the business in Vermont, you can take deductions and exemptions just like anyone else could if you were growing or selling anything else. So that's cost of goods sold, depreciating equipment, all the business exemptions that are taken. And so that will apply if you are an individual, like a sole proprietor who's operating the either cannabis cultivation or processing or retailing, or a business. So it'll apply to personal income tax, corporate income tax, etc. And so, unfortunately, it does add some complications, meaning that what you'll have to do is prepare your federal income tax return, which does not give you the tax deductions, and then prepare another federal tax return that does give you those deductions, so that then you can start where Vermont starts and then keep going for Vermont. And what we call those is a pro forma federal return. And so you prepare a new federal return as if you were entitled to those deductions under federal law, and then you calculate your Vermont tax. It's actually the same thing that we did when Vermont had same-sex marriage union benefits, but the federal government didn't offer them. So a same-sex couple would they would file federally, single, and then they would create a new federal return as married filing jointly if they wanted to. And then they would file that with Vermont, with their Vermont income tax return. So you have to actually recalculate the federal return for Vermont purposes, which is a hassle. We totally understand that it's a hassle, but it does give tax breaks on the Vermont income tax side.
It is well worth the hassle.
And so anyway, what the way we're going to implement that is on our income tax returns, there's going to be a cannabis checkbox. So if you're in the cannabis business, you'll want to check that checkbox on the Vermont income return, and that way we know that your information is going to be different than your filed information, and to look for that pro forma federal return.
Matt, while we're on this, do you want to talk about it at all, or do you want to wait?
However you want to do it. I mean, if we're on 280, that's a rabbit
Might as
hole.
well just might as well just do it now, so we don't have to kind of reorient ourselves later.
I'll start with my one caveat is I'm not a CPA, and you should definitely work with a CPA accountant on this, because it's not simple. There's not a lot of case law around it. Although there's a lot of bigger businesses now that are handling this now. So there's some trends that are happening now. But in general, the things, for those of you who don't know, that when you're managing all of your accounting, you've got your revenue, you've got your cost of goods sold, and your expenses. 280E really limits, most businesses can write off and just pay taxes on their bottom, the net income. So your revenue minus your cost of goods sold minus your expenses, and you pay taxes on that bottom number. Cannabis, because of 280E, which is a federal law to keep drug trafficking from skirting tax payments, realistically, what it comes down to is you pay taxes on your gross income. All of those things that fall under the expense category instead of cost of goods sold, you can't write off. They're not deductible. So what has happened is that you can really put into everything that you can push into the cost of goods section into your books legally, you should do. That includes anything that's related to cultivation and the production of cannabis. That includes like depreciation on your assets and things like that. You want to be able to make those distinctions. So it's really important that you have a good chart of accounts in your books and work with an accountant who will understand these distinctions. That like our books, we have depreciation that's part of the cost of goods sold and depreciation that's not. So any production equipment that we have assets for, we can split those so you can write off as much as you can. Retail is the problem, because the only thing that you get to use as deductions are the amount of money that you spend purchasing your goods that you're selling. You can also include Some of the utilities, if things are for holding inventory. So electricity, if you can portion out and calculate the square footage of your inventory room, anything that's inventory related, you can kind of usually push into that cost of goods sold category. But retail, almost all of the expenses associated with retail are not write-offable, except for the amount of money you spend buying the product. Everything else, your labor, the rent, all of that is not deductible because of 280E. But cultivating and production, extraction, are able to write off a lot more, or not write off, but to allow those deductions and the cost of goods sold because they apply directly to the growing and production of cannabis. So it's really important that you work with an accountant who either understands it already or understands that it's complicated and is willing to work through that with you to kind of come up with a really solid chart of accounts in your bookkeeping so you can make those distinctions now rather than at the end of the year and you're scrambling for it. But the tax number that you have to pay, start looking at your gross income, not your net income, because that's typically the number that you're going to be paying taxes on, which is a gigantically larger number than any other business that's not cannabis. To the point of most businesses are paying 21, 22% federally and between 7 and 8% state. What that ends up being is somewhere between 40, 60, sometimes more than that for their taxes and actual what you end up paying. It's real, and it's something you should be aware of.
Yeah, thanks, Matt. And I'll just underline just something you said at the beginning is that, Matt, I invited him here today because he has, over a decade's experience dealing with, as one of the original people at the Vermont Patients Alliance. So he's been navigating this very complicated system. He's here to talk about his practical experience. He's not giving legal advice, tax advice. He's here to kind of explain what he's been through over the years and how he's been able to navigate this. We had a question from Jesse. Jesse, if you want to unmute, maybe you can ask your question.
Hi, thanks so much for putting this on. So I think Matt answered it, so I'm going to get some clarification on it. I'm a cultivator, and I was wondering if there's a percentage I should have in mind to be holding on to pay back in taxes. And it sounds like it might be safe for me to consider that 40 to 60% federally. Is that correct?
Well, the way I've always done it is that rather than kind of like making up what that number is off the bottom, that net income, really use the normal percentages. Like right now it's 21, 22% federally, and depending on what bracket you're in, Will, correct me if I'm wrong, it's 7 to 8.5% for state taxes, depending on what your revenue is. So you want to look at your gross income. So, and that's what's really important on understanding how you categorize when you're bookkeeping, what account does this go in? Is it cost of goods sold or is it an expense? And I've been doing it for a long time, so it's kind of secondhand to me, but it's not straightforward if you haven't done it before. And just thinking through, is this something that is directly related to the cultivation or the production? Like if you have employees and they're the ones who are trimming, great. If you have another employee that's the accounting person you have someone who does bookkeeping, that's an expense. You can't write that off. Or I'm sorry, you can't use that as your deduction. So what I do typically when I'm doing figuring out numbers is to look at your gross income, which is the revenue minus the cost of goods sold. That's the number that you want to calculate your tax payment off of, what ends up being 28, 29% total combined IRS and state tax, not the bottom net income. So when you're making those projections, you want to make sure that you understand what goes into cost of goods sold and what is not in cost of goods sold. That's the most critical part. And I'm always happy offline after this. I've done this every time I've done these calls. Feel free to reach out to me directly. I'm a total cannabis geek with this stuff. So reach out to me outside of this and I'll kind of help talk you through any kind of more specific stuff. I think it's fun. I'm a nerd.
Thank you so much. And another quick question is, how about for employees, like our master grower? What should they be aware of for theirs? Is anything changed for them versus yeah, I guess I'll keep it at that for now. So how about cannabis employees when they're filing?
Oh, their personal taxes?
Yep.
I've never had any issues personally, and I've been filing my own taxes for 12 years with cannabis income associated with it. Not to say that you can't. Well, I don't know if you've seen
No,
anything with that.
if you're a wage earner at any kind of cannabis business and you get a W-2, I can't imagine why your situation would be any different than any other wage earner filing.
Will's going to take your money regardless.
Yeah, we'll take it. And I'll mention that we have done, after the cannabis law went through, we have done substantial outreach to the Vermont Society of CPAs and the Vermont chapter of National Association of Tax Practitioners. So they should be well aware of these situations. And it's a little new, but if you encounter someone that has no idea what you're talking about wanting to file a pro forma federal return, then that's too bad. But remind them that this exists now and that they can do it. But the tax prep community should be fully on board and up to speed with all this by now.
That's a huge thing for everyone on this call to do. Absolutely go through that trouble. That's absolutely worth it. That's a big thing. It's going to save everyone a lot of money. It's only the state stuff, but it's something. And to that other comment, I've never had any issues with taxes and with my personal taxes. I do know other employees and people that have worked for us who have been kicked out of their banks when their banks found out where their money was coming from. It's never happened to me personally, but I do know people personally who have dealt with that. So you want to make sure that your bank or don't ask or make sure that they're okay with that, because I know that's been a real issue.
So there's a few questions in the chat, and this is obviously something, Will, you've thought about quite a bit. The vape tax, or what's, more formally known as the tobacco products tax. Can you talk just a little bit about on which products the tobacco products tax applies so that everyone's clear?
Yep. So there's an existing tobacco products tax. It's kind of self-explanatory. It is what it sounds like. And that is all regulated for tobacco wholesalers and retailers by the Department of Liquor and Lottery. So that is a little bit of outside of my area. But a few years ago, the tobacco products tax was extended to the vaping industry. So that is the vaping device and the cartridges and the oils, those sorts of things that are, devices that are used to inhale the substance. That's all subject to the tobacco products tax. And it does say specifically in the law, whether this is a nicotine delivery device or not, whether or not it contains nicotine. So that was a pretty broad definition that went in. And so because of that broad definition, my understanding is that some of these items, while not having nicotine, they might have the cannabis oil. Those could be subject to those would be subject to the tobacco products tax. But I also know that there's legislative activity out there on this issue. So this is a hot issue right now being debated. And so stay tuned for sort of, a conclusion or a result on that, because it's being debated right now.
So, who in the kind of supply chain needs to be collecting this tax and remitting it to the tax department?
On the tobacco products tax, that's a wholesale tax in Vermont. So typically it's charged when the wholesaler or manufacturer sells it to the retail establishment. So usually in Vermont, that happens when it's coming in. I like to think of it as when it's coming into the state, because I don't think we have a lot of tobacco or vaping manufacturers in Vermont. So it's usually when it's shipped into the state to the local retailer. It's a tax at that stage. And so these wholesalers will be licensed wholesale dealers, and they are responsible for this tax when sold to the retailer. There is a provision in the law that says if tax has not been charged, it is the responsibility of the retailer. But it's ultimate. First and foremost, it's a responsibility of the wholesaler when they're selling it into the state.
So I'm just looking at the chat. I see Tau Labs and Meredith. I assume that's Meredith Mann. Maybe had some questions related to this. I'm wondering if either of you, maybe start with Tau, if that answered your question.
It does. Thank you. That's super helpful.
And Meredith, did that answer your question? Seems like her question was a little bit more specific to, are there specific, does this 92% tax apply to pipes, papers, other kind of delivery devices, I guess I'll call them, that could potentially be for tobacco or for cannabis?
Yeah, it's the device that could be subject to the tax. It's a very broad definition of these devices that are designed for inhalation of vapor. So I believe so. When we're getting really into the nitty gritty of pipes and those sorts of things, I'd have to I don't know the answer to all these questions,
Yeah.
probably, because that's handled by the Department of Liquor and Lottery as far as what is regulated under the tobacco regulatory scheme. We have a tax on it, but DLL determines, who's a tobacco retailer and what stuff it falls under that regulatory umbrella. So
Okay.
you would have to, for the specific questions, I think I would probably defer to Liquor and Lottery.
Liquor and
The
lottery.
general rule of
Okay.
thumb
Yeah.
that I've been using, and again, this is trying to navigate this is tricky. Last summer, I was trying to figure this out, and I will sing the praises of the Vermont Tax Department. They are extraordinarily approachable and extraordinarily helpful with all this. I ended up last summer trying to understand this tax specifically. Ended up talking to James Whitehouse, is he the director
Yep.
of Tax Will? I ended up on the phone with him, and he called me back the next day, talking about this, trying to work through figuring it out. But it's kind of the opposite. The way I think about it, it's the opposite of the excise and sales tax. So excise and sales tax is at the retail, the tobacco tax is at the wholesale. So if you're buying it, the wholesaler that you're buying it from to sell it, you should be paying them. They should be charging you, and they should do that. You can pass that along to the consumer, which I would highly recommend at 92%. But you're not collecting tax per se at the retail level. That's my understanding.
Yeah, that's right. It's a wholesale tax. The cannabis tax and the sales tax that we've been talking about,
Those are retail.
those are taxes that the customer pays on the bill. The tobacco tax is a different animal. It's a wholesale tax, kind of in the chain of commerce that your typical customer never sees it, doesn't deal with it.
That's great. Yeah, and I know that there's legislation that may or may not deal with this, and I don't, I never hold my breath for any legislation because it has to run through so many different pathways where anyone can say no and hold it up. But it hopefully will get dealt with this year. And if that happens, the Cannabis Board will kind of issue guidance, and maybe in conjunction with the tax department, as to how the kind of what the new state of affairs is. Matt, I had a few questions that are kind of specific to you. You're in the interesting position, I think, of having run a medical dispensary for so long, and now an adult recreational. I think your doors are open in Montpelier. Am I right, for adult use?
finally, yeah.
So what did you do to go about preparing for this, this shift? Because the tax structure is totally different, whether you're medical or adult use.
I mean, from a tax standpoint, it's reasonably straightforward because of the software that we use. They have the ability to link specific tax rates to different types of products. So it's some work up front, but we've been using that same software and applying different tax structures to different products for the whole time. And I think that's the biggest thing for people coming online and dealing with this is if you're doing this manually with Excel or QuickBooks or something like that, or if you're using some sort of inventory tracking software or point of sale system, they should be able to apply specific taxes to specific products in different instances. And it's just understanding that, anything that's got adult use is simpler in some ways than medical, because medical, we had a lot of carve outs for exemptions. We didn't have to pay sales tax on anything that was THC related. But with cannabis, everything gets a 6% sales tax, period. So apply 6% to 100% of your products being sold. And then you need to make sure you understand what's got cannabis in it and what doesn't to apply that separate 14%. Like Will was saying, to have that line item, you should need 6% sales tax, 14% excise tax. And that's going to be real critical when it comes to paying that monthly or quarterly, depending on how your business is set up. I do it all through, it's really, really simple online with Vermont Tax Department, myvtax.com or .gov, whatever it is. And each one of those sales tax is a separate account, excise tax is a separate account. So you have to be able to separate those. So it's pretty straightforward. It's just due diligence, spend your time up front, putting your processes together up front before you're having to scramble at the end of the month trying to figure out how to separate those numbers. It's going to be a hell of a lot easier to spend time ahead of time.
Absolutely. Jesse, did you want to ask a question?
Yes, but it's not, it doesn't have to do with this. So if you guys are on a roll, you can circle back to me.
No, feel free. This is, it's supposed to be kind of a free-flowing conversation.
Okay, right on. I appreciate it because this is really new territory for me. I'm just wondering about owner contributions. And when we pay other people or ourselves out, is that something that we do after, or would you recommend us doing after we pay taxes? And then that goes into what, how much we pay on taxes? Or is that something you pay income on? Or do you even pay income on owner contribution? Does that make sense? Do you know where I'm going with this?
That's what your CPA is for.
Okay, right.
Yeah, I would say the same thing. There are different ways to pay for the owner to receive compensation. The owner can pay wages to him or herself. You pay payroll tax on that, or you can pay a dividend or take a draw from an LLC. But I would say if you're trying to figure out the best way, the most tax advantaged way to do that, you should talk to your tax preparer.
Okay, awesome. So I guess it means I'm digging in deep and looking too far into the details right now. I'm not behind on these things then.
I would say from a different angle to think about that is from a cash flow perspective, Jesse, that it depends on whether I always make sure you have the cash available to pay your taxes, and whether you're going to pay out dividends, you may have the income and the structure there available to do that. But cash flow is critical. So you want to make sure that you have the ability to pay your taxes before you pay your dividends or any kind of things like that to ownership.
Totally. All right. Awesome. Thank you guys so much.
So we've touched on this a little bit, Matt, and maybe Will, you could chime in too. I guess, Matt, from a practical standpoint, what sort of records are you keeping and how long are you keeping them for? You don't have to go into exact detail,
everything forever.
Yeah. Will, is there kind of a legal, is there a legal time frame?
There are different things.
Yeah, go ahead, sorry.
You're supposed to keep different records for different amounts of time. I believe, Will, if I'm not mistaken, like the longest frame is, I think, 7 years, something like that. I literally have every single receipt that we've ever had, every piece of paperwork since we started, in a box. Everything's electronic now for me. It's a lot simpler. But keeping records is absolutely critical, and keeping detailed records. The more detailed, the better. And more organized you are, the better. If you have an organization problem, fix it, and fix it now, because you're going to have to deal with that.
I think the IRS rule is about 7 years for Vermont. We wouldn't typically go back that far. If someone is just simply a non-filer, like they've never paid taxes before, there is no statute of limitations for us to go back. So there is no limit as far as backward looking. However, it's kind of a reasonableness standard, and we generally look back 3 to 6 years. So if you're a compliant taxpayer and you file every year, if you file every year, then you're putting the tax department back on its heels, because we only have 3 years to examine and adjust your tax return. So if you file with us, you've started the clock, and we can't audit and assess more tax after a 3-year period, except in very limited circumstances. And so, we're generally operating on a 3-year a 3-year timeline here. So yeah, between 3 and 7 years is probably reasonable. But I hate to even bring up the word audit here, because this is a new tax type for everyone, including us. And right now we are in the outreach and education phase and getting everyone registered for this. If you call us and ask us a question, that does not go on an audit lead list or anything like that. We are focused on getting everyone on the right track going forward. I can't imagine the tax department doing any sort of audit in the very first few months that this is rolled out. At this stage, we're just trying to get people, on the right track and everyone on the same page. So I hate to even bring up those sorts of issues, but from a record keeping point of view, yeah, probably 6-7 years is a good idea.
Get one of these receipt document scanner, $150, best money I ever spent for this kind of thing. I scan everything. Everything is digital now. I track it. I'm helping out another business right now, and we're going through this kind of record retention, how to kind of manage retaining your records and keeping them organized. Just come up with a naming system, keep it consistent, put a date on it, put a vendor on it, put what it is, and do that consistently. And put it in Dropbox, put it on a hard drive, whatever you want to do. I scan absolutely 100% of the documents that come into me. Receipts, bills, invoices, sales, everything. With all of the tax analysis you have to do, all of the business analyses, all of the things you have to do. And we used to be audited every other year. So we were always involved in an audit, not federally through the IRS, but the state was one of the requirements for the Department of Public Safety to manage that. So every single year for the past 10 years, I've dealt with an audit nonstop. Have records, scan them.
And have you ever been under scrutiny from the IRS?
Yeah.
Okay. Yeah. So, you guys joined tonight out of the goodness of your heart. You're not getting paid to be here, and we wouldn't be able to pay anyway, but I really want to respect your time. Are there any kind of last tips or recommendations that you would make to people that are just getting started in this? I mean, I know not everyone can just afford a lawyer or a high-priced, lobbyist or anything like that, but it sounds to me like a CPA is going to be your best friend. A professional tax preparer is going to be, something that just will take a lot of the stress out of your life. And is that true, Matt, or any other last pieces of advice?
100%. Get a CPA that you feel comfortable in, that is not blowing smoke up your butt, and is going to work with you to understand this. There are not a lot of CPAs in the state who have done this before, because it's new. So find someone who is willing to admit that they don't know it all and is going to work with you. If you find a CPA who's like, I know everything about this, be a little skeptical and ask a lot of questions. I threw my email in the chat, my personal email. Seriously, feel free. I'm happy to help. I'm not going to spend every 50, 60 hours a week helping everyone, but I really do like it. So feel free to, if you got specific stuff, reach out afterwards. I'm happy to help.
And Will, from the state's perspective, I mean, I know you've said several times now, give us a call. We are here to help. You don't always hear that from the government, but I think that actually is true of the tax department in particular. Right? You've been very helpful to me personally in trying to navigate some of our guidance documents and everything else.
Yep. It's free advice that we give, tax.business@vermont.gov, or just Google Vermont Cannabis Tax Guide and all the contact information is there. And there's a whole little call center that is just dedicated to business tax questions. So they're there for cannabis, sales tax, meals and rooms, corporate income tax. That's what they do. So, give them a call and they should be able to point you in the right direction.
And they really, really are helpful. Every time I've called about cannabis stuff, they'll follow me up to the chain. If they don't know it, they'll find someone and they call you back. To the point I was talking to the director of the tax department. It was great.
Well, I think we have just 1 or 2 minutes left. I just want to thank everyone for joining. I know that we try and make ourselves available. It's not always a rewarding experience when people ask us questions and we say, well, we're not here to kind of give legal advice or you need to talk to another professional. But really, this is new for a lot of people, and we are very empathetic to the fact that everyone's trying to figure this out together. This recording will be available at the CCB website if you missed anything and want to go back and review it. I think, Matt's email is in there, and, feel free to give the tax department a call or the CCB a call. And thank you very much, Will. Thank you, Matt, as always. And we'll see you at our next meeting.
Thanks.
Thank you.
All right. Take care.
Bye, everybody.